Bitcoin bulls versus Bitcoin bears. Has BTC already had its bottom for the bear market, or are we going down into new lower lows for Bitcoin? In this video, I'm going to be taking a look at a lot of data. I'm going to be showing you what I think the data means, and I'll allow you to make your own decisions as to whether you are feeling bullish or bearish on BTC. Essentially, I'm going to kind of help you cut fact from fiction, help you kind of navigate this space in a more data-led way without any kind of bullshit. Hopefully you find this useful and informative. If you do, hit the like button. I appreciate that. If you happen to be new to the channel, go ahead and subscribe, tap the bell, select all notifications, and you'll stay up to date with absolutely everything that we do here at Cheeky Crypto. If you haven't joined us in Discord yet, links are in the description down below. It's a fantastic community. I don't think you'll regret joining us. You can obviously talk to us a lot more down in Discord, and we actually cover a lot more in terms of altcoins and crypto generally down in the Discord server, so well worth checking it out. Okay, let's make a start with this. Here we have Bitcoin paired up with USD. We're on the monthly chart, and Bitstamp is our data source. There are three key levels here well worth knowing. First of all, the $19,666. This is the 2017 all-time high. This is also a very interesting point because a number that was basically being called out by many individuals, pretty much during 2021, calling for a $20,000 BTC revisit, which of course we have seen. We also have the slightly lower target of $13,880. This essentially is the kind of first rally from 2019, taking us to around the June time. Then, of course, we have another pull to the downside. This actually is November 2019 into the March areas around 2020. This is another key area for us, and I'm going to show you why these key areas are of note. Okay, so the first thing I'm going to do is I'm going to just grab hold of this pointer, and we're going to talk about this all-time high from 2017, the $19,666. As you can see, this is an area that is currently holding as support for our closed and open positions. This basically is going to be really important to see whether or not we are going to close below this line, and if we do not, then that gives the bulls a little bit more, momentum to the upside. It allows them to be a little bit more bullish than they were previously. Okay, now, one of the things that we have to understand here is that there's going to be traders that are going to react to these key levels. Okay, this is not really anything more above and beyond just how traders are going to react. There's going to be a whole host of influencers that will feel really bullish if we close above this key area of 19,666, and likewise there'll be a load of really bearish influencers across different social platforms if we close below 19,666. But essentially, if we break it down, what does it actually mean? It basically means that traders are going to be acting either bearishly or bullishly, depending on that closed position. Now, this is a monthly closed position, which means we've got all of September to get through to know whether or not we're going to close below it. Okay, and there's a whole host of different things that are happening on the weekly and daily and the lower timeframes as well that will help us understand whether or not we are likely to see a probable close below $19,666. Okay, so that's our first level. If we do close down lower than 19,666, the targeted range would be $13,880. This would basically be the next area that a lot of traders will be looking for support, meaning they'll probably short the damn thing until it goes down there. Essentially, what you're going to find is, with those leverage positions and shorts and longs, they'll create pockets of liquidity. So if we were to see the $19,666 level get lost, and we were to move down to, let's say, 13,880, there's going to be a strong bounce to the upside, as those short positions will create pockets of liquidity higher up in the price chart. And of course, that means that those whales, those institutional players, will be gravitating towards that liquidity to mop it up. So knowing that there's going to be a significant bounce around 13,880, if we were to lose 19,660, that would then allow us to think that maybe the bottom is in at $13,880. But no, that would not be the case. And this is because Elliott wave theory would basically trigger in and say that at $14,600, we've actually gone impulsive and trended to the downside. This would essentially mean that we'll probably be heading down towards that lower target, for $9,586.50. This is another key area. If I grab hold of my pointer again, we can see that just over here, this is an area of resistance that we broke through and tried to turn into support. This basically means that if we were to revisit this area of $9,586 here, this is going to be a strong area for support. Losing this area would potentially mean that we're going to be going down significantly lower, and at that point we're going to have to be talking around the kind of $7,500 range. Okay, and I'm not going to mark that up because I think essentially we're going to have to move down several different steps here, and these are the three key areas I think are worth noting on the monthly time frame. Now, if I bring up these two charts here, these are going to give us additional pieces of information about this monthly time frame. We have the relative strength index, and we have a stochastic relative strength index. These are two momentum indicators that actually work very similarly, but also slightly differently at the same time. We have a stochastic RSI that many of the recent viewers or regular viewers of the channel will know is really sensitive to price movement. This is ideal if we're not in a trend. It allows us to understand where we are in the market and whether or not we're going to see a momentum shift to the upside or to the downside. The RSI, on the other hand, is actually better for a trend. If we're in a trend, then essentially the RSI allows us to understand a little bit more about that trend. It helps us understand whether or not the trend is finishing and whether the trend is reversing. Okay, so on this monthly time frame, what do we see? Well, we see that our RSI, our regular relative strength index, is actually midway through. It's not oversold. It could actually drop all the way down to oversold. It's fine. It hasn't happened in Bitcoin's history. Doesn't mean it's not going to happen again. It has already reached all-time lows in terms of how low this this relative strength index has actually gone. Okay, so we've already done something new that hasn't happened before in terms of this relative strength index, specifically on this monthly time frame. Now we can of course see that this started all the way back here from $65,000, and it started to correct down even though we went up into a new all-time high. We can also go ahead and just draw on here a bit of a trend line, and we can see that we're potentially retesting and testing again this particular area, which means rejection from this area could take us down into, well, basically oversold areas on the relative strength index. Now, on the stochastic RSI, on the other hand, let me see if I can just collapse this one down. On our stochastic RSI, we're already in the oversold area. This is telling us that the monthly is actually ready to have some upward momentum. This is a good case for the bulls. Basically keeping us above 19,666 on this monthly chart and a good closure above that level, we have the momentum to take us up higher. So that could be fantastic, right? So something to keep an eye on, because essentially on this monthly chart, that's actually really good positive news for price appreciation rather than depreciation. So looking at that, we have some pretty decent kind of levels, but we can't just rule out that relative strength index either. Although we are not technically in a trend to the downside and we're just in a corrective state on this monthly chart, it's important that we also understand that the stochastic RSI is telling us a slightly different story to what the relative strength index is telling us. Now, in terms of how long we can be down here, we can be down here for a reasonable amount of time, as indicated with where we were back in the 2018 bear market and obviously the 2014-15 bear market as well. We have barely had any time down here at the moment, so this could last a little bit longer being oversold, and that is not a problem. So just because we are oversold does not mean that we automatically have to move to the upside, specifically on these larger time frames. But at some point we might start to see some volatile movements, and we might start to see some kind of move to the upside on our monthly time frame. Okay, so that's kind of what I have for you on the monthly time frame. But let's actually now take a look at what's going on with our weekly time frame. Okay, so if we just break this down a little bit lower, we can start to reflect on what's going on the kind of next layer down. The weekly time frame is an important one. It basically shows us our weekly close positions and what we would expect to happen on all of these as well. We obviously had the bear flag situation, which we kind of spoke about a little while ago, and obviously we broke down from there. We're currently moving back up a little bit, and again, we are yet to enter into that kind of range. With that being said, if we were, that's okay, and we can continue to kind of analyze the market. One of the big things about this weekly time frame, though, is again the stochastic RSI. Unlike the monthly, we're actually really high on our stochastic RSI. This is indicating that momentum is going to shift to the downside, and we're likely to see us lose that $19,666 range and head down towards that $13,800 range, and that targeted for a bounce down there. Okay, so this weekly time frame is giving us a pretty clear indication that there's momentum shifting to the downside, not to the upside. There is definitely limited upside momentum available on this weekly chart, specifically as we haven't really got the demand behind the price. And we'll talk more about that in a moment. As we kind of come down into our relative strength index, and I expand this one back up, we can actually see there's a difference between our relative strength index and our stochastic relative strength index. As I said earlier, right, the stochastic RSI is more sensitive to price movements than the RSI. And the RSI is actually trying to come out of this oversold area, with the stochastic RSI actually being up in the overbought area, or trying to come down from the overbought area. So any kind of price movement to the upside now has limited potential because of the stochastic RSI. Now it can, of course, when demand is high, stay up in this overbought area, but when demand is low, it actually only seems to come up here for a brief moment before getting rejected. So we want to be really aware that there is necessarily no trend to the downside. So our relative strength index is not giving us a huge indication as to what to expect. But the stochastic RSI is telling us exactly what the momentum is like right now, and it is not as laggy as something like a MACD, for example. So what we have is a kind of interesting relative strength index that is trending us to the downside here. Okay, and we could potentially retest this area and then move to the downside. Now, if I take this from this high point just here at our $69,000 high, and we were to put this trend line right here, we can see that we're trying to battle our way through on our relative strength index. Now, essentially here, this could be interesting and problematic for the RSI for a couple of different reasons. One, obviously rejection here takes us back down into the oversold area, and therefore we're ready to have another break to the upside at some point later. Two, we do break through this and we turn this previous trend into a bit of a support, and we can start to rally to the upside. As I said, though, our stochastic RSI is telling a different story here, and is telling us that actually there's momentum to the downside rather than to the upside. So we're kind of getting a bit of a conflict between the two. But let's park those up for a second. Let's talk a little bit now about what is going on with the most interesting kind of metric that gets thrown around a little bit. This is the 200 moving average. Now, this particular indicator has been kind of touted or kind of spoken about as the big bullish indicator that's going to tell us that we're in a bear market or a bull market. Okay, essentially what we're talking about here is how Bitcoin in history has actually bounced from this 200 moving average. Okay, it's found this 200 average and turned it into a support level, not once but twice previously. The March 2020 pandemic crash obviously wicked down below it and then came right back above it. So what's interesting is that the history of Bitcoin here says that this 200 weekly moving average has been historically quite bullish until recently, where we actually see that we've closed below this on numerous different occasions. Okay, we wicked down below it, we closed below it, we struggled our way through it, we closed above it, and then we got pulled all the way back down below it again. So, that indicator isn't really necessarily being spoken about by many influencers across the different social platforms because it doesn't suit their narrative that we're in a bull market. But this is actually telling us that we're getting rejected from a weekly 200 moving average, and that should actually be more credence to the downside, right? It should allow the bears to understand that there's more momentum to the downside. Not only does our stochastic RSI tell us that a price momentum to the downside is the most likely scenario, but we also have this 200 moving average also indicating that we're moving to the downside. Okay, but maybe the moving averages are not for you. Maybe there's other indicators that we want to kind of take a look at that might also help us understand what is going on. Let me go ahead and remove these ones, and I'm going to go ahead and just throw on here the Gaussian channel. Now, the Gaussian channel is a fantastic indicator. It definitely shows you where value is and where value is not. It is glorified moving averages, essentially, though. And basically, moving averages are just lagging indicators of past price action. Okay, so it's good and it's bad. It all depends on how you prefer to kind of look at your data. Now, essentially, if we take a look at Bitcoin history, what do we see? Well, in Bitcoin history, we can see that when the Gaussian channel turns red, that's historically been the bear market, and the bear market bottom obviously happens within the first kind of few weeks of that bear market low, of this Gaussian channel turning red. Okay, now that happened twice before, and of course the Gaussian channel right now is red, and obviously people are saying that the lows are in. Gaussian channel is red. We have the June low, for example, fantastic, and all that kind of good stuff. So again, this is another way of saying maybe the bulls are right, maybe the bottom is in, right? And that's for you to decide as well. Essentially, one of the things that's very clear about the Gaussian channel is that if you tend to buy when the Gaussian channel is red, historically speaking, it hasn't exactly ended badly for those individuals, as in that's generally where the pockets of true value are found. Okay, with that being said, when you're above in the green, you kind of find yourself in a bit of a profit. However, one of the things that we should probably note, and something that we should probably be fully aware of, is that we've only got two data sets here, or two data points of reference. We have obviously the 2018 bear market low, and we have the 2015 bear market low. Both of these, of course, are, you know, just because it's happened twice before doesn't necessarily mean it's going to happen for the third time. And again, like any other glorified moving averages, and that's essentially what they are. They're just historical price movements, and they do not tell you what is going to happen in the future. They only ever tell you what's happened in the past. So if we're analyzing what's gone on in Bitcoin history, we should also be aware of what is different about Bitcoin history versus what is actually going on right now. Okay, so what we're going to do is I'm going to turn the Gaussian channel off, and I'm going to show you one of the things that maybe not so many people are actually picking up on. Okay, and it's going to be on this weekly chart for ease of use, but you can apply this to many different levels if you want to. What we're going to do is we're going to first of all take a look at the 2013 high and the 2015 low. Okay, we can obviously acknowledge that we have a significant move down in an ABC fashion. Okay, this is basically a three-wave structure from an Elliott wave theory point of view. Now, if we go ahead and measure the distance on this, and we were to move over to the bounce, one of the key things here is that we did not come down lower than the 1.236. Okay, now if I come on over to the 2017 high and the 2018 low, again, we get a very similar situation. We move down in a three-wave fashion. Okay, so it's three waves down. We go ahead and we can measure up the distance here on our Stochastic Rsi's, on our Fibonacci retracement tools. We can move this over. I'm just going to eyeball it on this side right here, and we can see that the 1.236 is down here and we did not cross this level. Okay, so on these last two kind of bear market lows, we did not come down lower than the 1.236. Now we can come on over to where we are right now. We go ahead and we measure this three-wave drop at the stands at the moment. We pull this over to here, we can quite clearly see that we did cross the 1.236, and in fact we are currently just above the 1.382. This is again another indication that we're doing things differently. Not only in Bitcoin history have we not gone down lower than the previous all-time high until recently, we should definitely acknowledge that, you know, maybe we're rewriting Bitcoin history here. There's not a lot going on, and we should acknowledge what is different about what is going on right now versus what has happened previously. We shouldn't just ignore what is going on now that is different to what has happened previously, because those are variables that mean that the indicators that were working back then may no longer be working now. And therefore, it's important that we actually take stock of the entire situation. Now, as I was talking about on our monthly chart, one of the key things about this particular structure that we're on right now is that currently it sits as a three-wave structure. But if we drop down lower than this $14,600 range, this one just down here, then all of a sudden we are going to be talking about that $10,000 low. And that is because this on an Elliott wave theory is a wave 1, wave 2. This would be a trigger for a wave 3. We'd bounce for wave 4. So as I said, if we were to come down lower than that kind of $13,800 level, right around here, we would bounce up, and then we would pull back down. And that move to the downside would take us probably towards that $9,500 range. Okay, and that would then complete this 5-wave drop. Now, the issue with this, well, there's many different issues with this. One is 5 waves on their own. They do not usually appear on their own like this. They would appear as a part of a different structure. So we could argue, because it does look like $65,000 was a corrective stance on the RSI, that maybe all of this is just an expanding flat correction. Okay, that's a possible scenario, although an unusually deep expanding flat correction. Or alternatively, something more bearish is happening here, and we would hate to see it, but it could be a giant A, giant B, giant C, taking us way back down to the $5,000 level at a much later date. So, you know, for the most part, there's a lot of things to consider when it comes to BTC. There's a lot of things happening on the monthly chart. There's a lot of things happening on the weekly chart. And of course, there's a whole host of different structures appearing on the daily 8-hour, 4-hour, and 1-hour charts. I'm not going to go through them all in this video. I wanted to keep this one really top level. I wanted to make you aware that there's many different ways of looking at the data within the charts. They can look at different indicators and different price levels. If this, then that. Essentially, it's up to you whether you feel bullish or bearish, whether you take a look at all of this data and assume that we're in a bull market or a bear market. I will leave you on one final thing. that is these whale wallets. The whale wallets are not accumulating. The whale wallets are completely decreasing. They're decreasing at an alarming rate. They are selling into whatever pump there is for BTC. And these whale wallets, historically speaking, have a strategy that plays out exactly like this. This is the 2017 all-time high. This is the 2018 bear market low. The black line are the wallets of 1,000 Bitcoin or more, and the orange line is the BTC price. What do we clearly see here is they sell into the pump to the upside, and then they buy before the bottom is actually in. And when we take a look at what's actually going on right now with these wallets, they are selling into whatever pump they can, and they are not accumulating yet. And because they are not accumulating yet, it makes me think that their bear market bottom has not actually arrived just yet. So guys, I'm going to leave that video right there. Let me know what your thoughts are in the comments down below. If you found this useful, informative, hit the like button. I do appreciate that. And if you are new to the channel, subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.